You're listening to The Conversation. It's August 2020, during the depths of the COVID-19 pandemic. Financial markets are at an all-time low.
Well, as coronavirus spreads to more countries, it's threatening the health of the global economy.
Amid the doom, a US software company called MicroStrategy makes an unprecedented announcement. It has just bought $250 million worth of Bitcoin, the cryptocurrency, not as a side investment, not as a speculative bet, but as part of its official corporate strategy. At the time, one Bitcoin was worth around $11,000. Since then, it's dramatically increased in value to roughly $100,000. MicroStrategy changed its name to Strategy, and its executive chairman, Michael Saylor, is now heralded as the founder of a new and expanding movement of crypto treasury companies.
Bitcoin's not going to zero, it's going to $1 million. And you have all the evidence you need to determine that, right? The President of the United States has determined he supports Bitcoin.
Today, more than 100 publicly listed companies hold more than $100 billion of Bitcoin on their books. For some, like Strategy, it's fueled a huge increase in the value of their company. But taking this route also comes with some big risks.
There is still uncertainty what will happen with Bitcoin in the future, and therefore I think this could create some potential risk to these Bitcoin treasury models that these companies adopt.
In this episode, we ask what happens when a company's main value isn't its products or services, but its cryptocurrency investments. Are Bitcoin treasury companies the future of corporate finance, or just another speculative bubble waiting to burst? I'm Gemma Ware from The Conversation, an independent news and analysis platform partnering journalists with academics. Welcome to The Conversation Weekly, where experts explain how we ended up here. Larissa Yarovaya, you're a professor of finance at the University of Southampton in the UK, where you study the way cryptocurrency behaves in markets and how institutions and people are adopting it. Welcome to the podcast.
Thank you very much, Gemma. It's a pleasure to be here.
So, Larissa, do you remember when you first heard about companies buying up Bitcoin? What was your first reaction to that?
Well, first of all, thinking, are they going to speculate? And after, probably I had a question in mind. What will happen if Bitcoin price will drop again? What are they going to do? It's quite a high-risk asset, and how it will actually fit in their long-term strategy.
So the first company that starts to buy up Bitcoin was this US company called MicroStrategy, led by its then CEO, Michael Saylor. MicroStrategy, which is now called Strategy, is listed on the NASDAQ exchange in the US. And in August 2020, Saylor announced that MicroStrategy had bought a huge amount of Bitcoin.
Eventually, we settled upon Bitcoin as the lowest risk, best safe haven crypto asset, like a digital gold. And we liked it because we thought it was a better gold than gold, and it had big tech upside.
Tell me about that and why they did it.
I think MicroStrategy made a very important and strategic move. They've been pioneer in a so-called Bitcoin treasury strategy. Before this company, actually, no one considered to hold Bitcoin as a financial reserve. Typically, Bitcoin being considered just for speculation, considered as an investment asset, maybe as some sort of side asset for portfolio allocation. But Bitcoin treasury is a very interesting strategy that involves companies to allocate in quite a large amount of their cash holdings into Bitcoin and basically reporting Bitcoin as official assets on their balance sheet. Of course, they continued their main area of operation. It's first and foremost a company that sells software. However, the use of Bitcoin as a reserve signaling to the market their strong association with cryptocurrency, with blockchain technology, and potentially a much more innovative and forward-looking perspective in comparison to their competitors.
So in August 2020, when Michael Saylor made this decision, Bitcoin was trading at around $11,000. What was going on with Bitcoin and crypto around that time?
Actually, this time was quite volatile for Bitcoin, and it's not surprising or unique from this perspective because it often happens in cryptocurrency market. Even in March, I think 2020, Bitcoin dipped further to $5,000.
The coronavirus outbreak is weighing on cryptocurrency. We can see Bitcoin tumbling over 10% this week as the outbreak exceeds 83,000 cases worldwide.
Starting from 2020, actually, cryptocurrency prices starts increasing. It was the beginning of COVID crisis, beginning of lockdown. There were lots of panic on the financial markets, the high uncertainty in the economy. So stock markets basically been in a huge amount of trouble, and therefore companies start looking for other directions and for alternatives where to potentially to invest. So crypto assets start becoming incredibly popular, and I think those consumers and those retail investors who before never considered cryptocurrency assets as a potential avenue for investment, they decided that these assets actually can offer substantial return and great opportunities to generate profit very fast. So if you're talking about Michael's decision to strategically invest in Bitcoin in this time, we can say that it was really an opportunist moment because probably after that, Bitcoin prices increase.
The thing about Strategy is that it's a publicly listed company. People can buy and sell its shares. And part of its reasoning for doing this, for buying Bitcoin, is that it wanted its market capitalization, its market value, to rise more quickly than the value of its own crypto holdings. And that's definitely happened in Strategy's case, and it's fueled a huge increase in its market capitalization. Can you walk me through why this idea of market capitalization is so central to crypto treasury companies?
I think it's all about signaling, right? Because the share price often depends on how market or investors perceive the company value, perceive its long-term value, and the impression of what will happen with the share price in the future. And we've seen it not only with Strategy, but with a variety of different companies that as soon as they're changing their corporate identity towards anything related to cryptocurrency, Bitcoin, this signaling very strong indication to the market that in the future, these companies will have a higher growth potential because they're innovative, because crypto will go up, the share price also should continue to go up as well. So overall, I think anything related to crypto, especially back to 2020, 2021, experienced this behavior of crypto exuberance. However, I must say here, this also can backfire. So the positive signals can push the price up on the traditional markets, but also a negative shocks on cryptocurrency markets can transmit to traditional financial markets, and actual shares of the company can go down. So it works both ways. Therefore, I think companies should be aware about it.
So the price of Bitcoin fluctuates, has done wildly in some periods of its history. What are the disadvantages then of a company holding Bitcoin on its balance sheet?
So I think it's quite a big risk because if the crisis shock will occur in crypto markets, then of course it will negatively affect the holdings of the companies, and this reserve will stop serving the purpose for the company. Because during the crisis shock, generally liquidity matters the most, and investors and companies trying to cash out. And if simultaneously many companies who've been holding crypto will decide all of a sudden to cash out, this will cause additional market panic and financial panic on crypto markets. And even those companies that did not intend to sell, they might face the consequences of this process. This is, quite obvious scenario, but another scenario, what will happen if Bitcoin price will continue increasing, and then the main value of the company will be just its Bitcoin holdings. From this perspective, a variety of stakeholders will think, what this company actually do, what this company operation model, and what the value of their products and services if the main part of their market valuation is basically Bitcoin holdings. So companies can look on the paper doing really well, but majority of these is just due to Bitcoin.
So little by little over the last 5 years, other companies have followed Strategy's lead, and this term crypto treasury company has emerged. It's really blossomed in the last few months, and there are now just over 120 publicly listed companies around the world who hold Bitcoin on their balance sheets.
So really over the last 12 months, you've seen this huge emergence of companies entering the market. And one of those, you just had a new announcement this week. Saquon's out of France announced $384 million raise to start their Bitcoin treasury. And so you are seeing the pace accelerating here.
Why has there been so much interest in this year?
I think one of the driving forces was the period when US in particular started endorsing cryptocurrency due to the Donald Trump election campaign.
I will ensure that the future of crypto and the future of Bitcoin will be made in the USA, not driven overseas.
But also because the market was anticipating quite a huge regulatory reforms in the US and globally to that US will become much more open for cryptocurrency, for fintech entrepreneurs in general, that US potentially will want to create its own Bitcoin reserve. I think it sends such a strong signal that not only just companies like Strategy have been doing it, but also potentially governments start doing it.
And we've been talking a lot about Bitcoin, but it's not just Bitcoin that companies are investing in. There are other crypto assets that companies are moving into, aren't there?
Absolutely. I think the second category of digital assets, I would say that companies are actively investing in purchasing would be stablecoins due to their stable value. Stablecoins are digital assets that have inbuilt stability mechanisms. For example, the leader of stablecoin markets, Tether, they maintain a peg 1-to-1 with United States dollars.
So one Tether is pegged to the dollar as $1.
Absolutely. And these assets, stablecoins, become incredibly popular over the recent years, and their market capitalization has exploded recently. And partially it's also driven not only by retail demands of retail traders, but of course by institutional interest in these assets and these holdings by large companies.
If today's discussion is getting you thinking, then why not take a listen to our friends over at the We Society? It's a chart-topping podcast that looks beyond the politics and headlines to explore the intangible connections that hold us together. In each episode of the We Society, journalist and author Will Houghton invites leading thinkers to share the evidence for how we can build a fairer, more connected society. Guests in this series include the professors Lucy Easthope on emergency planning and Tim Grant on the power of forensic linguistics, as well as travel journalist Simon Calder. These are insights based on research, and they're offering some ideas on how we can change the way we live. So do go over and listen to the We Society. You can find it now on Spotify, Apple, and all other major podcast platforms. Welcome back. Larissa, one Bitcoin is now worth roughly $100,000, but the price is volatile and it's currently looking a little fragile.
The cryptocurrency market is in shambles today as 200 million liquidations flushed in 15 minutes.
There was a mini crash in early October with $19 billion worth of crypto being sold off, liquidated in 24 hours. And yet at around the same time, Strategy decided to double down and buy more Bitcoin worth $27 million. And by doing that, increased its holdings to 640,000 Bitcoin worth around $73 billion. What, in your view, is Strategy doing there?
I think it's one of those strategies that Bitcoin went on sale, right? That some companies who are strongly believing in long-term value of Bitcoin, they would consider any short-term dips in Bitcoin price as a great moment to top up their Bitcoin holdings, because this will just make a great opportunity to keep the average purchasing price of Bitcoins lower. And therefore, I think it's again sending a very strong signal to the market that if Strategy bought more, then the price will recover. But timing of purchases of Bitcoin would be incredibly important. So the fact that Strategy was so successful in implementing Bitcoin treasury model does not necessarily mean that every single company that will try to do the same will be equally successful.
Why not? What makes this strategy more successful for some types of companies more than others?
I think for companies who are working generally in software, in IT, anything related to basically finance, software, innovation. So for these industries, they might be more confident in terms of these treasury strategies. But companies that are from completely unrelated industries, right? Companies that are not really related to Bitcoin, cryptocurrency, financial transactions in any way. I think it's quite risky in terms of long-term survivability of the company because these brands might get diluted and slightly lost in terms of losing themselves in the crypto association.
Is there a risk, though, that there might be too many companies who adopt this strategy and there could be a kind of overcrowding of the market going on? And investors also might start asking themselves, why am I bothering with buying company shares when I could invest directly in Bitcoin through, say, an exchange-traded fund that invests in cryptocurrencies?
Absolutely. And there is a risk that companies basically expanding their competition to the industries and sectors where they did not belong. Because now all the companies that are using the same business model, they will be grouped together psychologically by investors who are looking in the companies who are using Bitcoin as a treasury, as a main strategy in terms of managing their reserves, liquidity. And therefore, even if companies are coming from completely different sectors, they would indirectly compete with each other. And if with the time, just this strategy will become nothing hot anymore, nothing new anymore for investors, that they might become disillusioned with this strategy, and then all the companies simultaneously will start losing value. And for some companies, it will be fine, they might just liquidate their Bitcoins and still stay on float. If the majority of revenue of this company is still being generated by selling the product they intended to sell, then these companies will be all right. But if the company, with the time, completely lost the track what they actually do, their customers already don't know what the company does, their products sooner or later start losing competitive advantage. For these companies, I think this might backfire, and simply the strategy, at very least, it just simply will become less profitable.
Larissa, according to the tracking website CoinGecko, the 110 publicly listed Bitcoin treasury companies right now hold more than $114 billion worth of Bitcoin. So there's a huge amount of money in this right now. But are there any cracks beginning to show in the crypto treasury strategy?
I think the main crack would be volatility of Bitcoin price and basically the future of Bitcoin as a strategic reserve asset. So Bitcoin still will be very influenced by any regulatory reforms, any announcements. So far, the environment is pretty preferable and friendly to Bitcoin, especially under Trump administration. Therefore, I think the sentiment was overwhelmingly positive over the last 12 months. But it does not necessarily evident that cryptocurrency will become accepted as a main form of currency by retailers, by customers, and so on and so forth. Therefore, there is still uncertainty what will happen with Bitcoin in the future. And therefore, I think this could create some potential risk to these Bitcoin treasury models that these companies adopt. And if countries will decide that they don't want to hold these assets anymore and they want to liquidate it, they want to cash them and to sell them, from this perspective, it's also can originate another shock and the prices can go down as well.
Is there a wider risk to the economy if these Bitcoin treasury companies crash, the value of them crashes, Bitcoin crashes? Is there a risk of a real crisis here?
I think it depends which type of industries will adopt this strategy. So far, it's still, as you mentioned, 100-something companies adopted this, that it's probably still very small group of publicly listed companies adopting this strategy. Therefore, I don't think that will cause a substantial problems and substantial crisis shock if this would happen. However, if this strategy will be continued to adopted by a variety of different businesses, particularly by banks, banking sector will start using it and increasing their holdings and increasing their association with crypto. In this case, of course, a potential crisis shock may be higher. And we can see that then this crypto volatility might start transmitting to traditional financial sector. And then these companies would be criticized for this strategy by accepting potentially too high risk and not being forward-looking in terms of protecting their customers' interest.
There are endless headlines about crypto crashes, rallies, companies going all in, others staying away, governments flirting with it in terms of stable coins. How do we make sense of all of this as ordinary people trying to understand what this all means for the future of money?
I think for ordinary people, we need to be not misled by headlines, and we need to try to understand that cryptocurrency is just a different way of completing financial transactions, because many articles, they're trying to always, I think, overcomplicate things and trying to almost discourage a regular person on the street to even to learn something about cryptocurrency because it sounds so complicated. In reality, I think cryptocurrencies, there are lots of resources available how we can learn what cryptocurrency is. And I think what retail users, consumers can do is if they want to engage with this asset class, with this instrument, they need to really understand cryptocurrency in the best way they can, because crypto is not going to disappear. It still will be the part of our daily lives.
Well, thank you, Larissa. That's some sage advice for a new era. So thank you very much for speaking with us today.
Thank you very much. It was my pleasure. Thank you.
The conversation reached out to the company strategy on the issues raised in this episode, but they did not respond to our request for comment. In an October press release detailing another purchase of Bitcoin, the company said, by using proceeds from equity and debt financings, as well as cash flow from our operations, we strategically accumulate Bitcoin and advocate for its role as digital capital. That's it for this week's episode of The Conversation Weekly. You can read more about cryptocurrencies and Bitcoin on The Conversation, and we'll put some links in our show notes to where you can find articles on that. This episode was written and produced by Menda Mariwany and me, Gemma Ware, with production assistance from Katie Flood. Sound design is by Michelle Macklem, and our theme music is by Nita Saal. If you'd like to get in touch with us, you can email us directly at podcast@theconversation.com, and you can sign up for The Conversation's free daily newsletter by clicking on the link in our show notes. The Conversation is a non-profit news outlet dedicated to sharing the work of academic experts with a wider audience. If you value what we do, please consider supporting us at donate.theconversation.com. That's donate.theconversation.com. And please do also rate and review the podcast wherever you follow us. Thank you for listening.
Every week, Michelle Grattan offers you a ringside seat to the latest in Australian politics with interviews and insights from political insiders. On The Conversation's Politics with Michelle Grattan podcast, we cut through the spin and get to the substance with independent analysis of the issues that really matter. Stay informed, search and follow Politics with Michelle Grattan wherever you get your podcasts.